Hey everybody, I hope everyone is doing well and had a good day. Thank you for joining me for today's end of day review of the Emini 5-minute chart for Wednesday, February 4th, 2026. Here's the context going into the day. We have this very tight bear channel, small pullback, trending behavior, pullbacks all through here, very shallow, lasting 1 to 3 bars. The bull's not really getting any traction through here, and we finally got this minor reversal. Is 57 going to reverse the market in a major way? In other words, what's the probability the market goes from a small pullback bear trend into a strong bull spike and small pullback bull trend? The reality is that it's really unlikely for there to be a major trend reversal into an opposite bull trend without there first being a test of the bear trend's extreme, which is this blue line, yesterday's low. It's a strong enough minor reversal that it's going to get a second leg, and it did. And the second leg was strong enough for a second leg as well. But at some point, the market's going to find resistance. That might be somewhere around here. Market found support here several times, tight trading range. This was an area of interest. It's a magnet, so the market may have to get back here. But the question is, what will it do then? If it's unlikely that the bear trend converts directly into a bull trend, then the more probable outcome is it converts into a wide trading range. So maybe we find resistance up here, this becomes the top of the range, and then maybe the bottom of the range is all the way down here at yesterday's low. So on the open, we already have 3, maybe 4 legs up to resistance, and then on the smaller time frame, bars 2, 3, and 4, there's 3 pushes up. Bull breakout 2, relatively deep pullback on bar 3, but breakout to a new high, pullback, and a third breakout to a new high. So on smaller time frame, that's 3 pushes up in it's a channel, basically a trading range that is sloped. So down here on the smaller time frames, traders are buying low and selling high. But then look to the left, we're at this resistance area after 3 or 4 legs up. So for there to be a reversal here, or at least a correction, would not be surprising. But it's not until we get the breakout that the probability increases for the bears. Before the breakout, the bears have good risk reward, but where's the bear breakout to capture the second leg of? It doesn't really exist. There has not been a meaningful trendline break through here, right? It's a tight bull channel. There's your trend line, and there's your trend line break. So a bear breakout with follow through, strong 3-bar micro channel, 4-bar micro channel. Certainly a strong enough bear breakout for a second leg. But what I was talking about back here, so let's break it down again. Small pullback trend, bear trend line. Bulls break the trend line, but it's unlikely we get a major trend reversal before there's a test of the bear trend's extreme. So the way you study the Brooks trading course and you see the sections on major trend reversals, you need the ingredients for a major reversal. You need a trend line break, a retest of the lows, and then you might get a major reversal. But even then, only about 40% of major trend reversals become strong opposite trends. Most of the time, the market converts into a trading range. So the same is true over here. This is a decent bull swing. You can call it a bull trend, you can call it a spike, pullback, tight channel, bull trend. I'm calling it a swing because that's just kind of the terminology that Al would use. You can call it price action is fractal. So sure, if you look at the 1 minute chart, then from bar 57 to bar 4 today, certainly it's a bull trend. But on this time frame, the 5 minute chart, we can see it's a more bearish regime, more bear bars, and bigger distance moved by the bears. And even this, you can call it a bear swing, because then there's a bull swing. This, you can call it a bear trend. But once you get this opposite swing, stop order traders can make 2, 3, 4, 5 times their risk. Then you can start calling it a swing. So the bulls have a swing, but they're testing resistance. And if they're going to get a major reversal, we still need a test of these lows. But the same thing is happening on the smaller time frame here. Bull swing, so bull trend line break, but we still need a pullback. The expectation is we're going to get a pullback and test of the bull swing's extreme. Bull trend, bull swing, it doesn't matter what you call it. What really matters is the expected response from the market behavior. Bull breakout, tight channel, breakout on a higher time frame, trend line break, expectation is a test of the extreme, and then maybe a major reversal. But either way, this bear breakout is likely to get a second leg down. Problem with bar 8 for the bears, bar 8 is a strong enough bull bar for a second leg. So the first attempt to resume down will probably find buyers. The traders who sold the close 6, sold the close 7, disappointed with bar 8, so they use any shallow pullback they can get to exit. They're looking to sell higher. The bulls who bought, they're looking to capture a second leg of bar 8, which there's your shallow pullback and second leg. So the bulls get there. Leg 1 equals leg 2, measured move, testing resistance, bull swing, trend line break, two-legged retest. Expectation is sellers up here, and then a strong reversal and follow through, bar 13. Now the problem with 13 that I have, it's strong enough for a second leg. I still think the bears, this breakout down to bar 7 needs a second leg, but these two legs up were fairly tight. This was a really shallow pullback, and on a smaller time frame, you wouldn't have seen pullback. It would simply be a pretty decent bull breakout bar. So my hesitation with selling on 13 is that might be a 50% pullback of the rally. It's about a 50% pullback of the rally. This rally is probably going to get at least some hesitation, meaning at least a small second leg. The hesitation being that bears may not just step in and sell the close here because they're testing support. Bull breakout, pressing the breakout point, we may have to pull back here. But ultimately, I think the upside is limited, and I think the bears need a better second leg down from this breakout than they've gotten so far on 12 and 13. Another couple of legs up for the bulls. Bar 14 rallied, so it went up, down. 15 went up, down. Now it's two legs testing resistance, but a tight trading range, so it might be better to wait for the breakout. 16, a lot of overlap, not ideal for selling, probably sellers above. Trading range bars, tight trading range continuing, wait for the breakout, and we get the breakout on bar 19. Bulls can argue, 3 legs down, double bottom. Bears, they see a bear breakout of a tight trading range, second leg down likely, so still close and scale in with follow through. So breakout with follow through, good for the bears, but testing a support area, so we may have to bounce here. But this is a tight bear channel. The bulls already got breakout second leg, the higher rally, breakout, disappointing pullback, right? It pulled back probably close to 75%. And then an attempt at a second leg, which not quite symmetrical. Maybe they got 0.7 R, 0.75, 0.8, something like that. Pretty decent second leg, enough for trapped bulls to use 14 and 15 to exit losing positions. Now the bulls might be uninterested in buying until there's evidence that strong bulls are buying again. They need to see strong buying pressure. Through here, we don't have it. So tight bear channel, micro channel, 18, 19, 20, second leg down, likely. And still, test of yesterday's low, likely. So finding some support, 21, but probably minor. 21 really needs a decent follow-through bar and doesn't get it. Low one short, but at the bottom of a trading range. Support here. Probably buyers below 21 for, at least temporarily, for a scalp. But ultimately, I think it's always in short. 23, a decent reversal bar, and actually a reasonable buy. 23, 24 follow-through bar, so a reasonable buy setup. 3 legs down, I said, wedge, double bottom, reversal and follow-through. One problem the bulls have, 24 is a lot smaller than 23, so if there's truly strong momentum, then why is bar 24 so much smaller than bar 23? 23 also heavily overlapping the prior bars, so not really breaking out of anything. Although it is reversing after 3 legs down, the bulls do have that going for them. But then 24 testing that breakout point from earlier, from bar 19. So the bulls really need one more bar here. And then they don't get it, 25. So still always in short. If you exited, if you bought, reasonable to sell below bar 25. Because second leg down is still likely. Tight bear channel, pull back, expect a second leg. And then you can see the second leg measured move. Target was reached, and there's a reaction. Reversal follow through, 29.30. Strong enough for a second leg up. But this bear breakout is also strong. And the odds are it'll get a second leg down. So both sides need a second leg. Probably better to wait for a second entry short based on the strength of 29 and 30. But then testing breakout points, bulls losing momentum, 50% pullback of the sell-off. Bears, they can sell below 32. 33, high one, but at resistance after a bear breakout that needs a second leg. Bulls are expected to get 2 legs, 1 pullback, 2. Sellers above 33 likely. And then you can sell below 34, follow through 35, you can sell, still expecting a more symmetrical second leg down. 36, sell vacuum, testing that support, that measured move target. Now we finally got back to yesterday's low. We saw a minor reversal on 37, but not enough to completely reverse the market. Yeah, you can call it a wedge, several legs down, but until the bulls accumulate enough buying pressure, you have to assume that the bears are going to sell every time we test the trend line. But we are testing a channel line. Let's draw that. So 36, 37, buy zone of the channel. And the expectation for a bear channel is that it's going to evolve into a trading range and get a bull breakout. The expectation is not most of the time bear, let me rephrase that. Most of the time bear channels do not break below the channel line down here, break below it, and then become an even stronger bear trend. Most of the time, the market goes sideways or up, breaking the bear trend line, and the channel becomes several legs down in an overall trading range. So it's more likely we test the start of the channel somewhere up here than falling for a measured move. The bulls do have some buying pressure along the way. Decent bar, 8, 11. Reversal follow through 23, 24. That trapped traders. That's an area of interest. That's an area of resistance. And then 29, 30, also pretty decent bars. But still, second leg down, likely after 34 through 36. Reversal bar 39. After several legs down, 4 or 5 legs down, reasonable to exit shorts above 39 and wait, because you may get a correction and the market can easily test the trend line after attempting to break below the channel line. So If you're short, reasonable to buy back shorts above 39. If you're flat, it's aggressive, but some bulls will buy above 39, getting a great risk-reward ratio. But the only way they can get great risk-reward is if they have low probability. So bar 39, maybe a 30 or 40% buy setup. Same with bar 41. Reversal follow through, but a much smaller bar. But you can see the hesitation. We're going sideways after breaking below yesterday's low. The question is, are there more buyers or sellers below yesterday's low? You see the daily chart on the left here, big tail at the bottom of yesterday's daily chart bar because of this rally into the close, the trendline break. So it's going to limit the downside. This was a really decent trendline break by the bulls. And the market may be in a wide trading range now, and it's trying to break below it. Bears unable to get big consecutive breakout bars with little overlap. 44 a decent bar, but an upside bar. It's breaking above and below the prior bar. It's a tight trading range. Buy low, sell high. So tight trading range through here. Bulls finally getting a breakout 48. Trapping traders below. This green box, it's a tight trading range, an area of agreement. Traders are buying low, selling high, buy low, sell high. If you sold here, you got trapped on bar 48, trapped into a losing position. So remember, expectation, sellers at the trend line, but breakout follow through, 47, 48, probably will pull back and get a second leg. Because of the trap traders in the tight trading range, drew a horizontal line here. And it's just a best fit line. Some area of resistance here is likely to become support because of the breakout on 48. So maybe that's it. Maybe it's the close of 47. Maybe it's here. Probably support in this area. So expectation is buyers below 48, buyers on the close of 49, second leg up likely. But 49, strong enough bear bar for at least some hesitation, a small second leg down. That may be all the bears get. Leg 1, deep pullback. Leg 2, bulls still need their second leg. Bulls getting their second leg. Finding support, like I said here, the breakout point, 48, test, found buyers, test again, found buyers again. Is 54 a good sell? Low 1, low 2, low 3. It's a reversal bar, closing below its midpoint, good for the bears. But the selling pressure through here could be stronger. 49 is a decent bar. I said it probably needs a second leg, but it already got its second leg. So it got a symmetrical second leg. Leg 1, pull back. Leg 2, bears got their minimum. Bulls, maybe they need a measured move up based on their breakout and follow through, 47, 48. Reversal follow through, 55. It's an okay sell. The problem is that this tight trading range may have been a small triangle and final flag for the bear channel, and 47, 48 has flipped the always in direction to long. So it's still always in long here. So if you do sell, you have to exit above 56. And if you're flat, you can buy above 56, expecting a second leg up. Bears, bulls getting their second leg. Tight bull channel, second leg up here, likely. Remember, 23, 24, reasonable buy setup, failed to get even its minimum second leg. The 24 close is a test target. So this might be a measuring gap. With targets above, so 60, 61 are reasonable to buy. Nothing to sell. Climactic, bar 64. We've already got 1, 2, 3, maybe 4 legs up. There's an established bull channel line, and 64 is breaking above it and testing that resistance. Another bar with a big tail, 65, and then an inside bar, 66. So late leg, top of a trading range, testing resistance, and then here, kind of similar to bars 2, 3, and 4, up, down, up, down, up. So that's 3 pushes up on the smaller time frame. 66, an inside bar, so not breaking out of the prior bar. It's a trading range bar. Might be a buy vacuum test of resistance on the smaller time frame and on the 5-minute chart. This is happening across different time frames. So 66, not ideal for buying based on the context. Late leg at resistance and the smaller structure suggesting a correction is more likely. We're testing an area where the bulls who bought got trapped and lost money. So are the bulls really going to be eager to buy here, even though it looks like they have decent momentum? There's hints in the price action that this may correct. 1, 2, 3 pushes up, breaking above a channel line. Correction more likely than more to the upside. But tight bull channel, need a trend line break first. 69, breaking the trend line, good for the bears, but still probably going to test the top of this bull swing. Sellers above 69 likely. 74, now it's 2, maybe 3 legs up, testing resistance, not great for buying. Tight trading range. 75, a reasonable bar to sell. Context support's always in short. If you're long, you can exit below 75. 76, kind of like 73, 74. Now it's more clearly 3 legs up, testing resistance. 76, a sell to close bar. Bear surprise. 77, bear breakout, second leg down, likely, but pullback also likely. Testing support here. Breakout point, bar 62 high here. So bear breakout, pullback likely, but second leg down also likely. Bears get follow through, they get their second leg. Breakout. Breakout follow through, pullback, symmetrical second leg, and then profit taking. Reaction on bar 80. Reversal after 2 legs down to support. Breakout point. And then out of time late in the day. Alright, that's going to be it for today's end of day review. As always, thanks for watching, and to go deeper into price action and to learn more, you can check out all of the resources in the description of my videos. Alright, thanks again for watching, and I hope everyone has a great night.